Welcome to another episode of Million Dollar Stories, where we get to interview authors from all over the world. I love talking to authors because they have the courage to take their thoughts, their stories, their lessons, put it down in a book and share it with the many, ultimately changing their legacy and destiny in the process. And if you're looking to write a book out there, check out dreamstarterspublishing.com. If you're an entrepreneur, it will help you get clarity, self-awareness, but also opportunities with your business. And if you already have a book done, you want to generate leads with it for your business, check out bookmarketingcrm.com. Now, as you know, the individuals who listen to this podcast, we talk a lot about financial literacy and in financial acumen. The school system doesn't do a great job at all for a reason, in my opinion, when it comes to financial literacy. But there are people like our next guest out there sharing the wisdom. The book that set me free was Rich Dad Poor Dad, and helped me understand how to create wealth, how the wealthy individuals look at money, and it really boosted my financial acumen, I would say, in a matter of days. So the book that we're talking about today is called The Illiterate Executive, an executive's handbook for mastering financial acumen. The author is with us today, Blair Cook. Thanks so much for being here, man.
Hey, thank you.
Well, let's start off with the genesis of this book. If you want to tell us a little bit about why you wrote it, and if you can give us a quick little summary of where you come from and maybe the pathway you took on your way to where you're at now.
Sure. Here's the 2 cent tour. I'm an accountant by background. And so I've worked in public practice for a number of years. And then I worked in the corporate world for a bunch of large utilities. And then I left to work in the entrepreneurial world with a number of entrepreneurs up here in Canada. My first entrepreneur I worked with was a turnaround specialist. And so
Wow.
he'd get into businesses that were broken, essentially, and turn them around and get them back to profitability and that. And so a lot of my experience and the impetus for this book, getting to your real question, was working with companies that got themselves into turnaround situations. We have there's a rule of thumb that the management team that leads you into a crisis is generally not the same team that leads you out of that crisis. And so I got very interested and very frustrated sometimes with working with managers who were making poor decisions because they did not understand financial literacy. They did not understand their own financials. And so it'd be characterized by people who would be, for example, perhaps top line focused, but not focused on managing the margins or managing their costs, or people who would get themselves, just because they could raise debt, putting way too much debt on their balance sheet. And as a result, just getting snowed under by creditors. And so again, I just, the whole book is premised around, you need to know finance. I know you may be a great sales guy, you may be a great operator, you may have incredible, crazy, innovative products that you're bringing to market, but you need to have a degree, regardless of who you are. You need to have a degree of financial literacy to ensure that your baby grows successfully and prosperously and doesn't fall into some of those traps. And so, hence the name of the book, The Illiterate Executive.
I like it. And so you talked about the turnaround process. I'm fascinated with that. Maybe you do talk about it in your book, but is there any common trend that you notice that many of these companies run into, whether it's a certain comfort zone, whether it's take on too much debt, maybe they don't pivot fast enough, they ignore competitors. There's probably a combination of all of them, but is there any one,
You're
two, or three
listing all.
trends? Yeah, right.
Yeah, you're going through it. There's a lot of different ways you can mess up your business, and a lot of the times the businesses I get involved with have very strong underlying fundamental performance. Perhaps for instance, one of my turnarounds I did, one of the first turnarounds I did, 20 years ago, was a fishing company, and they were just doing value-added seafood. They get seafood, basically fry it up, and then put it into boxes and sell it in grocery, sell it through food service and the like. They had 700 different SKUs of seafood. And not all, like if anybody who's in the food manufacturing business and you're dealing with retailers, you sometimes have 2 or 3 trade programs. You have allowances you pay to get it on a shelf. You have, sometimes you have BOGO events, buy one, get one. You have coupon. There's so many different programs. And so we went through and we looked at these 700 different SKUs. We realized that hundreds of these SKUs were actually losing money. They had a negative gross profit margin. And so part of the turnaround there was we literally cut out a couple hundred SKUs to simplify the business. Because again, the more SKUs a business has, the more inventory you carry, the more complexity you have in the production facility, and it goes on and on and on. And so part of the turnaround strategy, simplify the business, figure out where your profitable core is. And then, in the course of 2 years, we started making more money in that business than that business had ever made. And I was working for private equity, and we tripled our investment in 2 years. And so that's an example of the turnaround strategy and some of the strategies, some of the simple strategies. And again, that's the illiterate executive. The team did not ever do this analysis. They were all very top line growth oriented. They were very focused on making $1 billion company, but not realizing that the more SKUs they added, the more complexity. Yeah, you're growing the top line, but your bottom line is getting smaller. And
Wow.
so again, you change the thinking around the organization. Sometimes you had to change some people, and that's how the turnaround fall comes about.
Wow, you're making me think of Steve Jobs, right? It's exactly what he did with Apple. He cut out so many products and focused on, I think, three, and people thought he was insane, but that's exactly what was necessary because the more you have, most likely you muddy the waters, and there are different
100%.
divisions. Yep, and so individuals out there, like you said, are growth minded, abundance minded. All right, let's just own the market share. Is it leadership that really is to blame? Do they hire people and then just create division after division? Is there a certain marketing problem where they just say, okay, well, we have these clients. Now we can bridge off and go into these clients. And then our target audience goes from this to this to this. And now your message is so watered down that you don't know who you are. You don't know who you're serving. You don't even know the problem that you solve for them.
I think because, and you think it's just a big company bias that would fall into that mindset, but it's not. I've seen it in even small companies, even my
Yeah.
own little company. I do a professional development. I do write books. I do online learning. I can very easily get myself distracted, let alone, and I'm just a small little company. You get into large companies, and again, another company I was in. We were trying to create before I got into the turnaround situation. They were a diversified company that was doing beddings and linens and furniture production and HVAC equipment and oil and gas services
Jeez.
and oil and gas. We got in there, and it turns out that four out of the six businesses weren't even making money, and they were trying to turn each of those around. There was such a diversified group of businesses, each with their own unique characteristics and market dynamics. And so ultimately we sold off four of the businesses that weren't really producing or contributing. We lost money on those, but we focused just on the two businesses, and then we resurrected a growth strategy very focused on steel fabrication and manufacturing. And in that time, I got on that company has. I'm trying to calculate. It's almost 50 times X in the last 12 years in that particular company. It's had that kind of a turnaround situation. So
How hard is it to be in that room and to say we need to let go of this division or you sell off this
oh, super
company?
hard. It took years for them to get to that realization that I always say when you're in that turnaround corner, everybody wants to turn around a business, but sometimes you're better off selling a business if you can, and sometimes at a loss, which is what we ended up doing. And sometimes the hardest decision is to shut something down. And but sometimes that's the right decision because now you can focus on your profitable core. And it's very hard for a lot of businesses and leaders because to admit that they've made a mistake, I shouldn't have gone in that direction. I gave it to, I don't know, there's always like, how long do you give a business to say, you take it out behind the woodshed and give it the proverbial bullet and say, that's enough of that. We're going to come back and focus on our profitable core. So that is that's the hard part. But if you're doing this for years and you're continue to support your dog business, that's where I think leadership needs to step up and say, like, we gave it a year or maybe we gave it 2 years, but if you're in your third and fourth year with an unprofitable arm that's sucking all your time, resources, brain space, that's far too long. You move on, do something else where you can get market traction, develop profitable growth.
Yeah, and I think that's a key takeaway there. You do give it enough time for it to sprout, but there is a moment where you have to, have that come to Jesus moment or look in the mirror and say, all right, we gave it a year or 2 years, nothing's happening. You got to let it go, especially if it's taking your focus away from what is working, right? There are parts of the business that are working, focus on that. And I'm looking at your book here and you've set this up in 4 layers. If you want to explain this, very much like a wedding cake, I think you said. So layer one, first date financial foundation. Layer two, getting around the bases. Layer 3, meeting the expectations of the parents. And layer 4, finding a financial partner. Can you explain these layers?
Yeah, yeah. Just give me a moment here. Yeah, I'm gonna have a visual representation in front of me. So yeah, the first layer, and so it's these are an evolution. It's usually a year or two for me to work with a company, turn it around, get it going. I only get involved in turnaround or transformational situations, and so it's either growth, startups, or turnarounds. There's really the three things I focus on. So the first layer is just basically what I call financial intelligence. Is like, do you understand your financials? And everybody focuses on the old proverbial P&L, the profit and loss or income statement. Everybody gets excited. If I am I making money or not? They go right to the bottom line. They look at the top line. They get excited to see growth. They look at the bottom line. Am I making money? But that money, that bottom line, often is it's a bit of fiction sometimes because there's so much accounting stuff that happens in the middle there that a lot of non-financial executives don't understand. So stuff like non-cash charges, like for instance, employee compensation. If you're giving your employees, which a lot of technology and startup companies do, they give them equity grants. Well, there's some sort of fictitious, funny calculations that go into valuing those equity grants, which again they have value, which is why the accountants make you include them, but they aren't cash. They don't, the company doesn't have to pay out those cash to employees. We amortize capital assets over an extended period of time, and accountants have rule of thumb as to what are the economic lives. So there's a whole bunch. So when you look at that net income line, let's say you're making $1 million and your bottom line's $100,000. That 100,000, a lot of lay entrepreneurs would say, well, that's $100,000 that I've made in cash. Well, no, you may have made more or less than that when you look at the business. So that singular focus on the income statement is a very dangerous place for any executive or any entrepreneur to focus on. You really need to look at, and if you flip to page 2 in your financial statements, and you look at the balance sheet and you look at the cash flow statements, they help round out an understanding as to what is your financial position, what is the actual cash flow generation of your business. And so each one of those statements tells an important story, which is what I call that layer 1 of the wedding cake, which is you've got to understand your financials. So that's the first layer. Second layer is like, okay, I really got to understand. I have that understanding. Now I want to grow my business. And so it really gets around what I call capital allocation strategy. And capital allocation is the decisions that an entrepreneur, a board of directors, a senior management team is like, where's my highest yielding opportunities for me to deploy capital? So should I invest in myself? Should I go out and acquire a competitor? Should I diversify into an adjacent industry? All those kind of questions, and how you do that, how you do a merger and acquisition, how you value it. And again, the book is really written for the non-financial executive. It doesn't get into a lot of technical detail. It's just enough to make them understand kind of the high level so that they can talk sensibly if they're at a business dinner and they start talking about, let's say my EBITDA, earnings before interest, taxes, depreciation, and amortization. It's just really a proxy for cash flow. My EBITDA is $1 million, and I want to sell or buy a business. What will you pay me for? And you can use a simple rule of thumb of 8 times and invest it. So it kind of walks through how you do that. So now I know my business is worth $8 million. Well, how much can I finance with the bank? Well, if I know my EBITDA is $1 million and the bank will give me 3 turns of it, that means the bank will give me $3 million towards that. That means I need to raise $5 million in equity. And so it talks a little bit around financing strategy. Where do you get that from? Do you get it from private equity, or do you have to come up with savings or vendor take back? So it's just kind of like gives you enough of a skeleton or a framework so that if you're a non-financial executive, you can kind of enter into those discussions half educated and not stub your toe. So that's layer 2. And then layer 3 is it's really around I call it meeting the expectation of the parents. So if we're getting married together, it's around how you set up the board of directors, how you think of strategy, how you think about your reporting, management accounting. So now we own the business. How do we measure and evaluate performance of the management team? So that's the layer 3. And then layer 4 is really around finding good finance people, because I don't expect an executive to be an expert in this stuff, but you need to surround yourself. And so, do you need a trusted advisor? Do you need a controller, which is kind of somebody who's more technical? And it really depends on the situation as to whether are you trying to transform a business or turn around a business, or do you already just have a business that you just need to, let's say you have a portfolio of rental properties and you're just managing the books and doing remittances. There's not a lot of transformation going on, but you still need somebody to tell you how you're doing. So, and that's the four layers. And so it generally starts with the first one, and then ultimately you'll come to the question as to who do I need to have by my side to make me successful as an entrepreneur or a board or an executive.
Have you noticed any trend when it comes to businesses going from one generation to the next? I've always heard the first generation creates it, the
Oh,
second generation grows it, the third generation loses it. I think that's the phrase. So, in my opinion, the skill set to build something is a little bit different than the skill set to scale it, and then also the skill set to keep it. So, it's it's very difficult for a third generation or individuals who have never started a business to have that entrepreneur mindset. And I think there's a phrase that I live by within my company. I say it over and over: think like an entrepreneur. And I believe if you think like an entrepreneur, you realize that you could become resourceful in every aspect. But if you have everything given to you and maybe you've never fought in a street fight per se, as like an entrepreneur, maybe you don't see everything from the necessary angles. So have you noticed any trend when it comes to generational businesses?
certainly generational family. That's probably you articulated very well as some of the challenges. And in fact, even in non-family oriented businesses, like when you have a startup, you may have a CEO or a founder who's very good at getting an idea off the ground and identifying a market, but then you go to scale it, you may need a different CEO
Yep.
to do that. And then when he gets to a point where the thing levels out and it's steady state, maybe you need a third type of CEO. So again, somebody who's not, because sometimes you have CEOs that are. This is how you get a growth CEO who's in there and starts going in all kinds of different directions and loses their focus, and that's how some of these companies ultimately become turnarounds. They grow too quickly, or they grow too fast, or they overextend themselves, and so then you need a CEO who's very focused on like these are the three pillars of our business. We're not going to diverge out of these three pillars, and has some discipline behind it. So whether it's a family business with the generational, or whether it's just the different stages, there's different strategies, different types of CEOs and leaders that we need to bring in and lead.
Have you noticed any trend when it comes to bringing new people on board, whether it's you promote what from within or you promote or you bring in individuals from the outside? I think it was, if I can remember the individual that Steve Jobs hired, his name was John something, John Sandy, or he was the one that sold, I think, Pepsi. And he became
Oh
the
yes,
CEO of Apple and basically a tanked. And his comment is he made the ultimate mistake of bringing somebody from the outside who didn't understand the culture into the
yep.
company. And I would assume maybe you've seen the same thing where, yeah, maybe they did make it to a point. They brought an outsider in who didn't understand the product or the culture or the market of that specific business, and it tanked it. And I would think that if I'm growing a business, looking at this from a first person perspective of my own company, I would always promote from within. So anything that you would share with our audience in regards to that?
Oh, I agree with you on that. Probably one of our key plays is, and usually there's a lot of resident talent inside of a company. And so usually we get rid of that top layer, and I'd say maybe 8 times out of 10, we're bringing in middle managers and then promoting them. And
Mm,
so it was interesting in that fishing company I was telling you about earlier. Um, it's We had a guy who was running the restaurant channel. We had 7 channels in that business, and this was a new young guy at the time. And when we were turning around the company, we'd already gotten rid of a few presidents. We were having troubles there, but this guy was a middle manager. He was a director of food service, and he got promoted to VP of sales. And about a couple of months later, after we'd gone through a couple of presidents, we couldn't find leaders. Ended up getting promoted to the president of the company. After, as I said earlier, after a couple of years, we turned around and sold the company off. The acquirer, he turned out to be the chief operating officer of the U.S. business at the time. And then a couple of years later, he turned around and became the CEO of the acquiring company. And so it was like, and this is in the span of like 3 or 4 years.
Wow.
And so one of the talents we had is we were able to identify, and it wasn't me, it was the person I was working with at the time, my boss at the time. He was very good at identifying people who had strong potential. So this guy went from middle management to running the acquiring company in a span of a couple of years, and he had a very good stint there for 6 or 7 years before he was ultimately moved on to another position. So, but there's a lot of resident talent within companies that I think you need to tap into, and so I totally support. There are situations if you're absent of talent inside, yeah, you have to bring from external, or if you're trying to want to change the culture of the entire company, if the whole thing's so poisonous that I've had here's an example of a company that was just irreparable. Another turnaround. It was a hotel company, and we had been trying to turn around this company. It had a portfolio of 30 odd hotels across the country, and we were very much struggling to turn this thing around. It's just the entire leadership team, all the way down to the middle management. We could not find a way to turn this around. So after a couple of years, same boss, we ended up just closing the entire office. It was in western part of the continent. We closed the entire office, laid everybody off, and we started it up back in our hometown, which is on the east coast of the continent. And so we started from scratch. And so this was not a small company at the time, a couple $100 million. And so yeah, we wasted an entire year starting from scratch, but that was a case where we brought in everybody new, and then a couple of years later, it started firing, and that company still continues today. And
Wow.
so that was a case where you have to do the opposite. So you really have to assess what's the strength and depth of the leadership pool in the organization. But like I say, 8 times out of 10, usually it's there. It's just they don't have a strong voice at the executive leader. So that's where I say the team that leads it into a crisis is not going to be the same team that leads it out. But usually you've got people who know what the answers are inside that company today.
Yeah, I think the key ingredient is buy-in. If there's buy-in from the executives and they're all in on it, I think they can inspire a workforce to, keep chugging along and to get out of that chaos, to get out of those fires. So that's the way I look at it, but obviously it depends on the level you're at. Now you have a story. We love talking about historical figures that are significant to the entrepreneur space. You have a name here that I've never heard, Bernard John Ebbers. What is he all about, and what's the key takeaway from
This
his
is an
life?
old one.
I don't know him. How do I not know this guy?
Yeah, I think he was actually Canadian. Right? This is be 20 years ago. Do you remember the WorldCom scandal?
I remember
Uh,
hearing of WorldCom. I don't know of the scandal though.
well, the scandal was WorldCom was a large U.S. Telecom, and it was growing great guns back around 2000 to 2002 or three. Um, and it was like it was a market darling for a period of time until it wasn't. And all of a sudden, it came out. They were literally cooking the books. They were overcapitalizing their operating costs essentially. So they were taking costs that should have been going through the P&L, putting them on the balance sheet, which again, and so the market was entirely focused on the income statement and look at the earnings this company is generating. Well, the reason they're getting those earnings is they're taking all their operating costs and putting them on the balance sheet and hiding them there and bringing them in slowly over years. And so anyway, he got convicted. SEC came down him, and prosecutors came down. Anyway, the story with him is that again, he claimed that he did not understand accounting, and therefore it wasn't his fault that the statements were misstated. Well, he and several people and many people since, I'm trying to remember, like even our your current president and stuff, have claimed they don't understand the financials. Remember the whole inflation of values of properties in New York recently. I don't understand that. It's the accountants, and many executives have tried that defense in the past. And again, the illiterate executive, it'll come back to bite you every time. If you're going to sit in that corner office, you better understand the financials. Bernie Ebbers spent the rest of his life and died in jail, and so just one more
Wow.
person. So
Yeah, I never heard of him, but interesting. So I know that WorldCom blew up. Like it was huge, like you said, early 2000s. And that's when he made it, the MCI Communications.
yeah, yeah,
Interesting.
exactly. Yeah, and again, if you look at his life, I mean, he was a religious individual, very strategic in terms of how he was rolling up the company in the industry. I think he did a lot of good things. I don't know him at all. Then, man, he was booking the books, and that he was managing the Wall Street expectations, and fell and succumbed to that pressure, and ultimately paid the price.
Something that I've learned from a few mentors is that when you grow a company, it's smart for each of your employees to be a part of other divisions, for them to have a clear perspective on how they think and what they do on a daily basis. So I would assume maybe within this book, maybe one of the ingredients or recipes you could say is having maybe job swapping and having maybe a better understanding of the entire company, which allows you to have better decision making at the top. Is there anything in this book that explains maybe that is a key to success?
Yeah, I don't know if it's in the book per se, but I have to agree with you once again that I think that anytime you get an opportunity to get different experiences, and you can do this two ways. Like if you're in a large company, getting different, moving around between different divisions. I've been a CFO 7 times, and that's one of my key strategies with my key people is to give them different opportunities, whether it's different functional aspects of finance or working in different companies within the portfolio. Those are great opportunities in terms of building my own succession plan. So that's critical. My own self, like I said, 7 times, I've worked with dozens and dozens of companies, and so I find that the more exposure you get to the different types of business, there's no rhyme or reason. I've worked in probably a dozen or more industries in my career, but the challenges in finance are universal, and the skill sets. So it doesn't matter where I'm looking at a real estate company or a food manufacturing company or a services business. It's money in. Something happens in the middle to convert that to revenue, and then there's something left over, a profit or a loss at the end. And that business model is universal. And so it's understanding that little magic formula in the middle that converts that initial investment into cash that we need to understand. And as many different types of businesses you see out there, you can transfer that knowledge, those skills, those experiences between different businesses. So I came from a utility business initially, and utilities highly regulated. There's contracts for everything. Then I go over to this fishing company I've been talking about. I went over there and I asked them for the contracts. This was a half a billion-dollar company. It's not a small company. And I got it back a very flimsy folder with about 5 or 6 contracts in there. And they weren't even our contracts. They were like Costco's and their Walmart's. So we were signing their contracts. Nobody was negotiating them. And it was like the Wild West. And I was going like, how do we enforce our terms? And our customers were paying us in twice the time. Customers were hanging us with inventory, sending back inventory. It was just crazy. It was the Wild West. And so I took a lot of the experiences I developed and the discipline I had coming from the utility industry and said, listen, we got to have some risk management inside this company because look at all these stupid things that we're doing to ourselves. And, and the cost that it has on the business. And so these were simple fixes that, again, once we put in, customer contracts, you think that's silly, but that's just the way that business was run at the time. It was all handshakes and meals and entertainment with customers and buyers. That's how they ran it. But put some contracts in place. If you're going to order a special SKU of seafood, well, you tell us you need 2 million pounds. You're going to buy 2 million pounds. You're not going to buy 1.5 million pounds and stick us with the other 500,000 to figure out what to do with it at the end of the promotion kind of stuff. It was simple stuff like that.
When you make these changes, are you hated by many within that organization because you are the new force that they have never dealt with? And so I'm assuming that any type of change, especially if they've become accustomed to a certain lifestyle, that you are pretty much looked upon as the devil for a while. But then maybe there's incentives and rewards put in place, and then they see you as an ally. So I know that whenever I implement new structure within my company, there's an adjustment period, and it takes a little bit of time for them to see the rewards. But it's my job, I guess, to articulate that to them right out of the gate. That shows their life will actually get better if we implement this. So what is it like to go in there, make these changes, and to be the enemy almost for a while?
I literally had this conversation with a new potential client this morning, and they were very apprehensive of us coming in and getting involved because of the adversarial approach. And I go, listen, it's like Buckley's, Buckley's cough medicine. Like, it tastes kind of crappy going down, but it works. And so you have to get through that adversarial and stop pushing back against us. You either accept us and we come in, And if not, like I say, we very often have to change out management. We don't want to change out management. Usually there's a short leash given to existing management to say, will you listen to our ideas? A lot of the work I've done, we were, activist investing, Catalyst, a lot of these companies we've gotten into, we've kind of done proxy fights in the past to get ourselves involved in some of these companies. And so we're very not always welcome into these companies when we make our investments. We're deep value investors. But like I say, in a lot of these situations, after a few years, like I say, the one company I've been involved with now, this thing's 50 times what it was in 12 years ago. And so we've definitely got full buy-in many years ago that, we actually found our ideas were good, simplify it, focus it, grow it organically that way. And it pays off. So it doesn't always work out. We've had some really dumb investments, but we've made way more good investments than we have poor investments. So
As a turnaround expert or coach or consultant, are you tied to the end product, the end result? So it's not just a fee for you to be involved. You're going to be compensated on the back end, so you're tied to it, maybe equity wise. Is that right?
sometimes, yep.
Okay.
No, I usually, when I start believing in a company, I'll take an equity position in the company. And sometimes it's
More
and sometimes
transactional.
sometimes it's just transactional. So yeah, it really depends on the situation as to whether I have a stake in it or not.
Got it. Got it. Okay. And so it sounds like, from whenever you first started, it sounds like you take over and then your goal is to almost flip it like a house. And that maybe that's not the case. It's you basically get involved, turn it around, and then kind of maybe set it free and let it do its thing with its new systems and processes and direction. Is that right?
It can be. So
Okay.
sometimes like I said, I've been involved in one company. I've been involved in a couple of companies now for 15 years, and they continually grow, they're continually transforming. And then there's other ones I've literally flipped in a couple of months. And
Wow.
my engagement's been pretty short in some of those. And so it's usually, sometimes it was a divestiture. It's a turnaround to a point where you get the company cleaned up enough that somebody will buy it at a price that you'll accept. And so that makes it a pretty short. Or there was a blockchain company I got involved. That was my shortest stint. It was only a couple of months, but the idea was to take it public. Once we took it public, boom, that was for me. I was tapping out because I kind of called that one early. The blockchain thing was kind of a crazy thing 4 or 5 years ago, and then that was just too crazy for me. So I said I'm walking away from that industry, which in hindsight turned out to be a good call.
So another thing that I've learned from mentors is, hey, in order for you to pave the road for success in your business, you need to give everybody in the company an understanding of where they're at and where we're going, right? And I think that is financially too. So in this book, if you're an entrepreneur or an owner of the business or high level within an organization, do you recommend sharing the numbers with the team? Therefore, they're able to see, number one, where they're at, the benefits of the growth to witness the transformation, but also maybe to implement incentives and rewards. Therefore, if they hit this, then there's some type of benefit to them. So, in your book, do you have any type of strategy that encompasses that?
Yeah, I think that's super important for the numbers to be widely shared. It's always a leap of faith because again, there will be certain actors inside the company that may use them for nefarious purposes.
Right. That's
Whether
that's what
they're
everybody's worried about.
leaking
Correct.
it to the competition or taking it with them or using it to negotiate a higher raise, or if you're a union environment, there can be nefarious purposes that can counteract that. So again, you kind of weigh that, but I'm much more of a radical open, especially if you're going to do transformation. It's very hard to do that in private, and so I'm very much a believer that in the guys that was at Bridgewater there, Ray Dalio and his radical openness principle. And so I'm one of those guys that tries to be very transparent with the team and people. We can't deal. Jim Collins would always talk about the dealing with the brutal facts of reality. And sometimes, especially in turnarounds, the brutal facts of reality is this company's going to go tits up if it doesn't do something different than what it's doing today. And so, and some, the change experts out there, the John Cotters of the world, they'll say that you need to create urgency. And so that fishing company, we struggled for 6 months. The first 6 months I was at that fishing company, we struggled to get people to actually buy into that change was necessary. And it wasn't until my boss came down and we had a couple hundred people working in Boston at a plant. And he announced in front of everybody at a town hall, and he goes, there's an expression in business that some things are worth more dead than they are alive. And you could hear a pin drop in the place,
Ooh,
and they're going, did he say we're going to shut this place down? And the reality was the thing was trading at like half its book value. He could have just liquidated the inventory, collected the receivables, and doubled his money. But it wasn't until he threatened to shut the place down and then shook things up that people said, okay, listen, we got to do something different than what we've been doing historically at this company. And
wow.
he dropped that gauntlet. We lost dozens and dozens. We only had 200 people. We probably lost 30 people in the next couple of months because he dropped that gauntlet and everybody thought he was going to close it down.
So
But
they
this is
started
where,
looking elsewhere, right? That was it. They jumped ship.
immediately, and we lost some good people in that transition. But we also the people who we retained were dead set on proving him wrong and said, listen, there's a viable business here. And they did, and we did, and we were successful. He was successful, and so he tripled his money instead of doubling it by closing it down. So he was happy with that outcome, and we moved on from that engagement.
And that shakeup, like you said, probably bonded people, right? It really did create this tribe effect, and maybe there was more buy-in from them emotionally, which said, "Hey, we're in this together," and maybe he's not just doing this for himself, his own sake, his own selfish reasons. He's doing it for us. So let's make sure this works. And so I would assume
People
that they,
underestimate Yeah, people underestimate that emotional aspect of change. Like you have to feel change in order for change to actually take hold. Because if it's just a bunch of words and it's just like a plan, people don't feel it. We had he laid this down, started losing people. We changed the leadership team, brought that guy in. I was talking about earlier. I became the CFO of that company. We had this offsite at a yacht club in Boston, and we were all sitting around a circle, and there was people that were visibly upset and crying and tears, and they're going to shut us down. But we had this come to Jesus moment where we just put everything on the table, and from that day on, we said that if you have good ideas, we're going to advocate for them. And so I was up at our parent company was up in Canada. It was a Christmas party, and I was talking to the CFO up in Canada, and it was at her house, and she and the controller were there, and I was advocating on the phone in the middle of her Christmas party for changes to the IT system because I had to do it as a month end and all this stuff. But anyway, I went to the floor for the guys down in Boston to get this change in, and they approved it. Lo and behold, it turned out to be a mess. And the deal was that if it turned out to be a mess, my controller, had to clean it up for all the other divisions because it was an ERP change. Anyway, but the point of the story is I had to go to the mat for these guys and show them that we are going to do things differently, and I am going to advocate for you. And so, yeah, that one turned out to be a bit of a disaster, but the other 10 things I advocated for turned out to be great. And people saw that. And so we whether it was an investment in re-racking our warehouses so we consolidate our inventory, or whether it was a new hire, so bringing in somebody else to support, with a sales guy or whatever. We were doing stuff like that all day long, and we went for like a year flat out of just making smart business decisions that came from middle management. It wasn't about managing expectations because again, we had nothing to lose because we could close the business down and still double our money. So everybody just went for it and just totally changed the culture. And like I said, the guy we brought in to become CEO, he went on, he was very successful. And for years, I kept in touch with him after we made our exit. And he goes, listen, you just started it. And I just kept it going for years and years. And you take a look at the stock price. I think the stock price tripled or quadrupled during his tenure for the 6 and 7 years after that. And so, but it's about starting that momentum, that flywheel that Jim Collins loved to talk about. Set that flywheel in motion, and you get it spinning and spinning and spinning, and then some really incredible things. So he was always goading us that we sold out way too early in that one. And good on him for doing that. And I love that, and that's why. But he was sharp financially. Getting back to the letter executive, he knew his numbers and he knew how to run a business.
yeah, that gives you such an advantage in life. And as a leader, right? People believe in you more if you know the numbers. When is it, last question I have for you when it comes to this, when is it time to really, dive into making all these big changes, hiring a turnaround expert? Maybe there's cycles to every business. When it comes to the economy, I know that the real estate guys, I worked with a lot of real estate guys last year. I know the real estate guys are struggling this year because of interest rates, the economy, a lot
Oh
of
yeah.
changes. So when is it too early, or when is the right time, or when is it even too late to hire a turnaround expert? Because there are so many factors to take into account.
It's a good example, and I've been actually talking to real estate people as well, given where we are in the economy and the interest rates and the cycles and the different sectors of real estate. So that is a very challenging. And so, yeah, it's when do you do it? Like it's the first sign that you know you've got troubles, and it's not like I don't know. I can't remember what they are, but there's like 7 stages of indications. Like when your revenue, I can't remember. There's 7 stages. There's early indications, and people say, oh, it's just temporary. Things are going to turn around. And so they wait a quarter and then they go, okay, well, hang on a second. This is, it seems a little bit more symptomatic, but we can fix it. By the time you've let a couple of quarters go by and you still haven't done anything about it, you're now in a bit of a pickle because you're behind the 8 ball. And so it's really at that first sign that maybe after the first sign, but maybe in the second stage of something going wrong that you should think about, I got to do something differently. But everybody has that it's human I don't know, hubris that they can fix it themselves, and sometimes they just can't. And some things are beyond their control, like real estate, commercial real estate. COVID came along and just decimated an entire sector. And I understand that, but then you take a look at how some of these real estate companies, they're levered, 12, 15 times to one. There's so much debt in there, and interest rates weren't going to stay at 0% forever. Yet they just kept on piling the debt on there. And so, yeah, something comes along like that and just puts a lot of stress on that. So there's a self-induced, problem of that I would guess, and that could have been prevented had they not been so. I'm not going to say greedy, blind, incompetent. Who would put that much leverage? And we saw that back in the great financial crisis and the banks. And so time after time, we see financial executive, not financial, any executive, sometimes financial, sometimes non-financial. And then in hindsight, it's so obvious. Silicon Valley Bank, looking back at their risk management program, obviously lacking. And so, and then that triggered a whole avalanche of issues for the entire regional banking sector.
Hmm.
And so, but these are, in hindsight, it's obvious, but in the time, it's not that obvious. And so that's why this financial literacy, this financial intelligence skill set is absolutely critical. And unfortunately, in my experience, it's rare. It's rare. I think a lot of people can, especially a lot of CEOs and especially a lot of the other executives, they just do not understand their numbers or the nuances of finance well enough to run a business.
Hmm. Yeah, guys, know your numbers, keep things simple, right? Worry about culture because that's really going to be instrumental in your redevelopment, your transformation. So, a couple great takeaways there. Do you have a website, or if there's any other way to get a hold of you in addition to buying the book? Is if they are listening to this, what is the best way to get a hold of you, get in contact with you, or just reach out to you for a quick question or two?
Sure. Yeah, the website's pretty simple. It's executivefinance.ca because I'm Canadian. So, but executive finance.
Executive finance. Let me see if I have it on here. Yeah, so executivefinance.ca. That's right. Okay. So, and then YouTube. You have a YouTube channel, Learn Finance Today. Is that right? Is that the YouTube channel
It
handle?
is, yeah. And if you want to learn the basics of finance, probably the most popular video, it's got, I don't know, millions of views, but it's just learn accounting in an hour. And so you can learn accounting in an hour. And I don't know, it's whatever reason it's gone viral for, it's been there for 10 years. And every month there's tens of thousands of people learning accounting in an hour. So it's however I explain it, it somehow connects. I don't know
I
how
have
many
to,
university students have taken that. And the other 3 months of their program haven't taught them what I can teach them in an hour.
man, do you have a call to action at the end of the website or at the end of the video to go to a website or to get your book or anything? Because that would be unbelievable for you.
It would be. I'd love to make this a bestseller, but no, I'm not that sophisticated in my marketing. So you just go to Amazon and look up The Illiterate Executive, and you can find it there.
Nice. Yeah, it's on Amazon. 4.0 stars, average rating. Great work, man. Simple title, simple cover. I respect anybody who knows how to put a book together. So great work, man. The Illiterate Executive, the Executive's Handbook for Mastering Financial Acumen. And once again, that website is executivefinance.ca. So check him out and get in touch with him. He's on LinkedIn. That's how I found him too. So Blair Cook, thank you very much for being here, man. And I love the insight that you were able to share with us, and it matches up with a lot of my mentors, what they told me. So Makes me feel good that I'm on the right path, at least a little bit.
There you go. You got confirmation bias nailed down. So thanks, Mike. It's
Yeah.
been a lot of fun.
Echo chamber complete. I like it.
Yeah,
So,
closely
Brother Cook,
curtained.
thanks so much, man.
All right. Cheers, man.
Remember, guys, $1 Million Book will lead to $1 million life.